Are we live, everybody? Give me a second. Alright, good morning. Good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss, broadcasting live on YouTube and other streaming platforms. Happy Friday, right? Happy Friday. Yes, good morning, good evening. Yeah, yesterday we had electricity. I'm not sure if my English is correct. We had the electricity breakdown. Okay, everybody, never forget, trading is a learnable skill. When you learn in the correct way, the goal is to bring you from zero to a millionaire trader in 3 years in an institutional way. What does this mean? You're first an analyst and then you're a trader. And as always, if you want the free ebook, everybody, the little book of trading secrets, please visit the website www.fxbossfx.com. And if you want the free manual, this one doesn't cost you a cent, please send me an email to mikefxboss@gmail.com. Alright? Okay, you never forget, everybody, you're going to graduate from this course when you have your chart set up and ready for trading. Number 2, you have your strategy in place, you understand why you win, why you lose, and you understand how probabilistic thinking affects your strategy. You have a complete understanding on how this market, so number 3, right? You have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. Risk disclaimer, this stream is not trading and or investing advice. This webinar is for educational purposes only. Alright, everybody, you can follow our company, you know, if you want, it's in the description, Costa Cap, right? Let me share with you the website. Is this one we just finished this morning, you know, we just finished this morning the different things, right? You have in Portuguese, English, analyst on demand. Okay, ready? So today we have Forex course 101, lesson 13, how to use the confirmation time frame, everybody. And I'm going to delete most of the things. Okay, now we are going to have a trading rule slash strategy rule, right? Trading rule, strategy rule, and it goes like this. Before I enter the market, any pattern, I need to see the confirmation of that pattern from the higher, not lower, from the higher time frame. Yeah, that's a rule. Okay, everybody? And here we have the trading time frame. Here we're going to have the trading time frame, and here we're going to have the confirmation time frame goes on the left, which is more important. Confirmation time frame. Okay? Yeah, we're going to check some pairs. Confirmation time frame versus the trading time frame. It's nothing special. Yeah, you have it in the manual. It's nothing special. So you can do this if the trading time frame is the 15-minute chart, everybody, then the confirmation time frame is going to be the 1-hour chart. It's times 4, but not always. Give me a second. If the trading time frame is the 30-minute chart, 30 minutes times 4, so it's not always, right? So it's the 4-hour chart, not the 2-hour. Is the 4-hour chart. If the trading time frame is the 1 hour, the 2 hour, and the 4 hour, then the confirmation time frame is the daily. Yes, this is the direct relationship, is the daily. And if the trading time frame is the daily, then the confirmation time frame is the weekly. Give me a second. Weekly. Now, nobody trades the weekly, but you know, just for educational purpose, if your trading time frame would be the weekly, give me a second, then the confirmation time frame is going to be the monthly, right? Monthly. Okay, everybody, this is what you need to learn. You need to remember, if you are trading the 15-minute chart, the confirmation time frame is the 1 hour chart. If you're trading the 30-minute chart, the confirmation time frame direct relationship is the 4 hour chart. If you're trading the 1 hour, 2 hour, 4 hour chart, the direct relationship with the daily. If you're trading the daily, the confirmation time frame is going to be the weekly. And if you're trading the weekly, the confirmation time frame is going to be the monthly. Remember, it could be a strategy rule. Before I enter the market, any pattern, I need to see the confirmation of that pattern from the higher time frame. Who wants to know and learn how you lose on, we didn't learn it, but it's a great example. Who wants to know and learn how you lose money on candlestick formations? Talking about this concept, this rule. Before I enter the market, I need to see the confirmation of that pattern. Who wants to know how you lose money on candlestick formations and candles? This lesson is the upgrade of this lesson, everybody. We talked about multiple time frame trading on Wednesday, I believe. Alright, everybody. And this is the upgrade of that lesson. Do you know how you lose money on candlestick formations? If you don't learn and use this concept, which is a strategy rule, and Fibonacci are barking. Hello David, how are you? Hello Olga. David, we meet today, right? 8 p.m. your time, 5 p.m. my time, David. Hello Shantana, how are you? Do you want to learn, everybody, how you lose on candlestick formations? Yeah, we didn't learn yet. If you don't use this concept, you are going to, it's the candlestick formation, just one pattern, but if you don't obey this concept, David says, yes, David, is going to analyze. Today I'm the student, David is the master. Me and David, we're going to see if David is ready to go to the Forex course 202, the advanced institutional trader course, when you're going to learn what tools institutional traders use, and learn that this market, this business is not what you think it is. In the advanced course, that how money is produced in the financial market has nothing to do with what you think. But Forex course is 101, you know, it's the foundation. Okay, everybody, if you are, I need to learn candlestick. We're going to learn Shantana, it's part of the course, Forex course 101, don't worry, we're going to learn. So, candles and candlestick formations, right? If I am, let's say that on the 2 hour chart, so we're looking at this one, everybody. Let's say that on the 2 hour chart, I have something like this. I have a bullish candle, okay, I have a bullish candle like this, and then I have a doji like this, and then I have a bearish candle like this, right? Okay, and I have a counter trend line break in between. and this is the 1 hour, 2 hour, 4 hour chart. Simultaneously, when this happens, the daily, let me rearrange it here, the daily candle is going to be, at the moment of your entry, the daily candle is going to be something like this. Make sense, everybody? The daily. So every 1 hour, 2 hour, and 4 hours, so 1 hour chart or 2 hour, you know, the market went up and up and up, so the daily was moving up and up and up, right? And then there is a doji candle, you know, we're going to learn about dojis and, you know, what is the bullish pressure, bearish pressure. So it has a wick up here like this, just an example, you know, maybe like this. So it's pushing down, and this leaves, you know, from the daily standpoint, this leaves the tail, the wick, like this. Does the entry make sense on the 1 hour, 2 hour, 4 hour chart? Because you're trying to short the market. Whatever methodology, whatever strategy you have, does the 2 hour, 1 hour entry make sense? Type in the chat. You're trying to short the market, right? You have a down, you might have the down market way, whatever, you know, let's say this was a retracement, you know, and now the candles, you know, on the 1 hour, 2 hour, 4 hour chart, you know, the candles, those are the candles on the 1 hour, 2 hour, 4 hour chart. First candle, second candle, now up in here is the doji, you know, something like this, you know, you're looking at the candles, or you're measuring the retracement, you know, okay. Now, of course, this candle was, the previous candle on the daily was red, and the most recent candle is green, right? Because this would be the graphic representation of the green candle on the daily. So, does this entry on the 1 hour, 2 hour, 4 hour chart make sense? What's the answer? What's the answer? No, it's any pattern. We're going to check charts, right? Any pattern. I'm reading the comment not on YouTube but on the other streaming platform. Boss, does it mean that before I enter an uptrend on the trading time frame, I need to see an uptrend on the confirmation time frame? What do you think? What is the most important cardinal rule, concept of the Forex course 101? The big one. Without this you're going nowhere. Not in the beginning, not in the middle, not in the future. The higher time frame controls price action and movement of the smaller time frame. There are many concepts, many rules how this market moves and why this market moves as it moves. But the most bigger one is the higher time frame controls price action movement of the smaller time frame. Olga, Shantana, David, Alex, Mario, does this entry make sense to you? On the 4 hour chart? Yeah, this is the upgrade of this. Right? Now we are trying to upgrade the knowledge, everybody, to a higher level, you know. So you have a signal from the 1 hour, 2 hour, 4 hour chart, don't you? Don't we have a signal here to go short on the 1 hour, 2 hour, 4 hour chart? Exactly, yes we do. We have a signal to short the market. And if you short the market without checking the daily, make sense, everybody? This is knowledge, don't worry. We're not judging anybody. Without checking the daily, then what happens a lot of times is that the 1 hour, 2 hour, 4 hour chart is going to do the next candle is going to fall. Background color red again. So the next candle is going to go down and you're going to be happy, and then the next candle is going to go up, and the next candle is going to go up, and the next candle is going to go up, and the next candle is going to go up, probability wise, right? Okay, and when it's the end of the day, this candle, which is called the daily, it's still moving up and down, and the daily is going to go up, 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 like from here, right? It's going to up, 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 and it's going to close like this. Does this make sense? And this is difficult. Psychologically, in the advanced course, you're going to learn about homeostasis. You're going to see me doing this a lot of times. Homeostasis, the innate drive to stay the same. Homeostasis, that 50% of your psychological makeup doesn't want to be a millionaire. 50% of your psychological makeup doesn't want to be rich. You want to stay in the comfort zone of your own life, you know. So that's not easy. Why? Because you have a signal from the 4-hour, 2-hour, 1-hour chart, but you must wait for the daily to close. Okay? This is why this trading strategy rule is so important. Before I enter the market, any pattern, I need to see the confirmation of that pattern from the hard time frame. So here is the counter trend line break to short the next extension, but you didn't wait for the daily. It could be 15 minutes to 1 hour, doesn't really matter, but you didn't wait for the daily candle to close. Make sense? Especially when the market intraday, you know, when the market intraday is going to give you 3 or 4 candles down, like in your direction. Make sense? And that's difficult because the good analyst, the good student, knows the rule. You know, we are all the same, psychologically speaking. You know, I know the rule, I've learned the rule. I'm David, you know, or I'm Alex, whatever, you know, and I'm looking at the 1 hour, 2 hour, 4 hour chart, and I see one, the next hour, the second one, the next hour, the third one, the next hour, the fourth one. I'm seeing the market falling for 4 consecutive candles on the 1 hour chart, on the 2 hour chart, on the 4 hour chart, and I'm looking simultaneously that the daily is going down. True or not true? True or not true? This is where you, now I'm not going to there is no nice way to say it, everybody. Okay, I'm sorry, but there is no nice way. This is when you, the retail trader, make mistakes, not the institutional trader. Make sense, everybody? The institutional trader might have the same reaction, like, oh, market's going down and I need to short the market, but the institutional trader, if he's going to enter, they're going to push his or her ears. Make sense? The institutional trader has a much easier way of respecting the rules. Make sense? For the retail trader with no boss, now this becomes exhausting because you're looking the market going in your way that you've predicted correctly, you know, and you know that you shouldn't act until the daily closes. And then homeostasis kicks in, you are after the money, you see that you think that you are smart, you think that you are right. By the way, all of those things, the mind traps are in this book, everybody. The little book of did anybody read the little book of trading secrets? Not all of them, but many of those mind traps. The need of having control over things, you know, the need of always being right, you know. So you have the need of, you know, you think that you are right on the prediction, whatever, but simultaneously, and you are seeing the daily chart, you know, oh, it's going my way. And when you short, when you sell, what happens then? When you sell, this would be the example, then the market does what? Whoa, news announcement, whatever, you know, just an example. Then the market does this, and this, and this, and this, and you see the market eating your account alive. You see the daily candle, which was moving before, you know, 1 hour chart, every hour down, 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 and then you see the daily up, 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 and when the daily candle closes like this. The most important question today, it's Friday, so I'm going to give you a golden nugget. The most important thing that you can learn right now from this very lesson is the market doing this to me, or am I doing this to the account, you know? Type in the chat, what do you think? And you're doing this over and over and over and over again, and you lose, win, lose, win. Is the market's fault? Is the market doing this to you? Or it's your psychological makeup when you want to be right, you are chasing the money, the market is going your way, but you are not obeying the rules you didn't really learn. Shantana, is the market doing this to you? Olga, is the market doing this to you? David, is the market doing this to you? And everybody else online. I'm not sure if there is anybody else on YouTube. Douglas is going to say, oh, the market is doing this to me. Who is clicking the mouse? Who is clicking the mouse? You know you should wait for the daily candle to close, and the daily candle didn't close, and you clicked the mouse and you shorted the market, you know. The first one, it's not a big deal, but 4 hours before, so, oh, the market's going my way. That's why you are so attached, everybody, to wait for retracements. Make sense? Shanta says, I did it to myself. Okay, everybody, any questions so far? Do you want to take a picture, photo? Take your cell phone, take a picture, print this out, glue it to your room where you trade, where you learn. Type in the chat when it's done. Boss, can I use this rule in my strategy? Sure, this is not my rule. This is a Forex Course 101 rule. As a matter of fact, let us check if I'm missing anything. Hard time frames, there you go. Get this, no matter the time frame, the best entry in markets. Okay, we've learned this one, not a problem. Question, alright. Oh, there you go. See everybody, it's in the manual. The 1 hour, 2 hour confirmation time frame. Okay, lesson 14, all good. Okay, Olga, Shantana and David, type in the chat currency pairs. Everybody, we're going to split the screen like this. We're going to split the screen. Just an example. Let's go to the first one, AUD CAD, and AUD CAD. Okay, so let's go to, just an example, let's go to daily and 1 hour first, right? Daily and 1 hour first. Euro dollar, it's going to be next. Very good. Can you see, everybody? If you would, this would be better on trading view. Give me a second. Let me see if I can open trading view. Trading view. All right. We're going to go to split the screen, and it's going to be the daily, and here is going to be the 1 hour. And let's go to ALLOCATION, everybody. Okay. Now, can you see, everybody, if I would short the market, syncing layout. If I would short the market, I'm moving the vertical line on the 1 hour chart. If I would short the market, everybody, can you see what I would short on the daily? Let's hide those two. Okay, so look on the left side, everybody. If I would short the 1 hour chart, what would happen nonetheless? If I would short the market on the 1 hour chart, did we have a signal from the daily to short the market? Okay, so from this to this, give me a second, one more. From the left vertical line to the right vertical line, well, it's a candle, right? So okay, let's hide like this. Did we have, everybody, did we have a signal from the daily to go short? Type in the chat, yes or no. Did we have a signal from the daily between those two vertical lines to enter the market, to go short? Boss, why the daily? Because the higher time frame controls the smaller time frame, that's why. You need to learn this, everybody. Did we have any signal from the daily candles in here to short the market from the daily? And look at these tails. The market went down, 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 and then closed up in here. The market went down, 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 and then closed up in here. Did you have a signal to David, Chantana, Olga on YouTube? Did you have any signals to short the market on the daily inside in here between those two vertical lines? Yes or no? And the next question, did we have any patterns to short the market? Did you have any patterns to short the market in the 1 hour chart? Counter trend line breaking here, counter trend line breaking here. Did we have a downtrend on the 1 hour, 2 hour, I mean it's 1 hour in this example. This is how you lose. That's how you lose. Don't worry, I have a 20 seconds delay on the chat. Don't worry, it happens to everybody. Shadona says, no, shorting not. The daily, what about the 1 hour? Can you see, everybody, what you're doing? Without this knowledge, you could be shorting a downtrend. You could be shorting a downtrend, and there is a downtrend, make no mistakes, there was a downtrend, but because the higher time frame controls the smaller time frame, you would eventually lose because the market would reverse and go back up. Can you see it, everybody? So this is AUD CAD. Now let's go to Euro. Olga, you can type your currency pair. We have time. David, you can type your currency pair. Let's go to Euro Dollar, and let's go to 1 hour chart and the 15-minute chart. 1 hour chart and 15-minute chart. Can you see, everybody, the 15-minute chart and the 1 hour chart? What would happen if you would short Euro Dollar from here to up in here? So left click, sync in layout, and right click, sync in left. What would happen? 1 hour and 15-minute chart. Okay. So 15 minutes not really going up, right? Well, what would happen, everybody, if you would short the market on the 15-minute? Whoops. What would happen if you would short the market on the 15-minute chart? In here. Can you see it, everybody? Just an example, right? Now there is no right or wrong, but eventually, right? Let's say that you shorted the market in here, and you shorted the market in here, and risk reward ratio wise, whatever, 1/2. Just an example, 1/2, right click and clone. And clone. So the market would never hit your take profit. And then what would happen? The market would go. Can you see, everybody? Can you understand, everybody, how we can easily, our brain can easily assume that, you know, we are in a downtrend, and we are in a downtrend, by the way, but from the 1 hour chart, what was the market doing? Can you see, everybody? So before you... Now, listen up. It's a probability game, alright? It's a probability game. It's a probability profession. If you can have the patience, and wait for the trading time frame to align with the confirmation time frame, then you are going to have a better probability. Does this make sense? Sometimes you are going to do something on the smaller time frame, and the market, it is going to go your way. Make sense? Good news, bad news. Sometimes you are going to short the smaller time frame. That's the good news. Sometimes you are going to short the smaller time frame, and the market is going to go your way. But bad news, but not 7 times out of 10. Make sense, everybody? 3 times out of 10, you can do whatever you want on the smaller time frame, and the market is going to go your way. 7 times out of 10, this is why the grand majority of world population lose in this profession. It's a learnable skill. Okay? Because as we said before, the daily candle is going to close like this. And this was in here, and when you shorted the market, the daily candle was in here, but then it's going to close up in here. Okay? You're going to have a better chance, better probability if you wait for the confirmation time frame to give you the same confirmation. Any other pair, everybody? So now on the 1 hour chart, see, everybody, the 1 hour chart on euro dollar, it's making lower low, lower high, lower low, lower high, lower low, you know. So if you short the 15-minute chart, you have a better chance, right? Can you see it? Any other pair, everybody? One more, and then we're done for the day. It's Friday. One more pair. Olga, David, one more pair. And you can also tell me a time frame, everybody. You can check. Boss, do you check the confirmation time frame before you enter the trading time frame? Yes, I do. Yes, I do. What it's called if you trade from the 15-minute chart, what is called a way of trading? What's the name of a way of trading when you are trading 1 hour time frame and you don't bother to see the hard time frames? Exactly, it's called speculation. Don't speculate, everybody. Olga, Euro JPY. Olga, what? Let's go to the. We can. It's all the same. Let's do an exercise. You know, let's see weekly and daily, right? Weekly and the daily. Weekly and daily, everybody. Weekly and daily. So that's the weekly. That's the daily. Okay. Now. Look in here, great example again, everybody. Do we agree that this market is kind of in consolidation? Do we agree, everybody, that this market is kind of in consolidation? Wait, 1, 2, 3, 4, 1, 2, oh, here. 1, 2, 3, so here, right? You don't see the future. 1, 2, 3, 4, 5. Isn't this market kind of in consolidation? Just an example in here. So vertical line, you have a bearish candlestick formation, okay, and I'm going to sync in layout. If you would short the market in here, just an example, do you see how was this? I'm going to left click, right click, sync in layout. If you would short the market in this bearish candlestick formation, and there is a bearish candlestick formation on the daily, look what you would short on the weekly. Can you see it, everybody? And because you are shorting a bullish candlestick formation, I understand. Okay, now, okay, yes, go. Okay, let's go step by step, right? Somebody's typing, oh, I don't understand, too fast. Okay. On the daily chart on Friday, I'm seeing a bearish candlestick formation, all right? The vertical line, it's where the bearish candlestick formation is, all right? This bearish candlestick formation, it's a signal for me to short the market. So when I short the market, just an example, if I would short the market on Friday because of the bearish candlestick formation, and there is, or if I short the market on Monday morning on the daily chart, at exactly the same moment I would short a bullish candle from the weekly. Make sense? Inside this weekly bullish candle, there are 1, 2, 3, 4, 5, the last 5 candles from the daily. So not every single time, but 7 times out of 10, because I've shorted the bullish candle on the weekly, and the weekly controls the daily, then bam! This is what would happen. I would lose on the daily. Can you see it, everybody? Now it's Friday, there are a few more hours left, but if the market closes this bearish candle on the weekly, the probability of this market going down on the daily is much higher. So this was the weekly and the daily, and David, AUD USD, everybody. We checked the weekly and the daily, we checked the daily and the 1 hour, we checked the 15-minute chart. Let's check the 30-minute chart with the 30-minute chart compared to the 4-hour chart. 30-minute chart and now the 4-hour chart. Okay, everybody. Now, extension, retracement, extension. Alright, everybody. This is from the 4-hour chart, the extension, retracement, extension. Whatever you would do on the 30-minute chart, would this be considered high risk or would this be considered low risk? And then we're finished for the day. Boss, can you repeat the question? The green one, it's the extension, retracement, extension. It's the up market wave on the 4-hour chart. Alright? Okay. If you would short the market, because you don't know the future, if you would short the market on the 30-minute chart, because it's making lower lows, lower highs, right? Would this be considered less risky, low risk or high risk? Shantana, low risk. Why? Why low risk? If you are, everybody focus on the, it's going to take some time, don't worry. Is the 4-hour chart controlling the 30-minute chart or is the 30-minute chart controlling the 4-hour chart? This is question number 1. Once you answer the question number 1 is the question, then if the 4-hour chart is controlling the 30-minute chart and you are shorting the 30-minute chart, aren't you shorting a retracement on the 4-hour chart? Ring the bell. Are you shorting a retracement on the 4-hour chart, on the 30-minute chart? And if you're shorting a retracement on the 30-minute chart from the 4-hour chart visual perspective, is this high risk or low risk compared to you are going to wait for the market to break the uptrend, is going to make a low and a lower high and a higher high. Meaning, do you have alignments when you short the 30-minute chart downtrend, and there is, do you have an alignment with your higher time frame? Everybody, we've seen candlestick formations and candles, right? And now we are seeing trends and market wave, and we've seen consolidation with the candlestick formations. The question is always the same. If I don't have a pattern on the higher time frame, because you don't see the future when you trade, right? If there is no alignment between the trading time frame pattern and the 4-hour pattern, is this considered high risk or low risk? There is no right or wrong. What do you think? Everybody, is it okay for you if we move the class to 1 hour after? I'm thinking to move the classes 1 hour after and to have classes Monday, Wednesday, Friday. High risk, says Olga. High risk, exactly. Okay, everybody? David says yes. Okay, everybody, have a great weekend. That's all. High risk. That's all for today. See you back on Monday, right? Until Monday, stay strong and trade as a business owner, everybody. Remember, you are the boss of your business. Alright? Have a great weekend, everybody. This is the boss, signing off.